Hey everyone, today we're talking about whether you should be investing as an individual versus as a company and what loopholes you can take advantage of. This is the second part of a three-part breakdown of an interview. The first part was a beginner's guide to real estate investing and why you should be using holding companies to protect your money from tax so you can do more with it by investing it instead. And in the third part, we go into if the famous BRRRR strategy, short for buy, renovate, refinance, repeat strategy, that is popular in the US, also works in Spain for building wealth in real estate. The links to those videos I'll of course be posting in the description. Alright, now enough of me talking and let's get to it. Okay, so what are the benefits are there to buying real estate as an individual versus as a company? Both if incorporated in Spain or if it's a foreign company. I guess in here you mentioned before about, getting the 50% off as an individual if you're just buying one property and then the 8 properties as a company. Is there anything else that you would say? So is there any difference here regarding if the company is in Spain or outside of Spain?
No, basically there's no difference. The only difference is between EU and outside of the EU.
Okay.
So if it
Yeah,
would
okay.
be a German company, the German company would pay here 19% because there's a special tax rate for people or company that are from another countries inside of the European Union of 19%. If it would be a Spanish company, it would be 23 or 25% as a general tax rate. And then is this special tax regime of 8 properties. But actually, the only thing that we should consider is if you want to rent it and you want to invest a lot, just go for the 8 properties. If you don't really need this money, if not, as a natural person and you live in Spain, you have this 50% off, which is super interesting.
Mm-hmm.
And if not, just take a look into this issue of European or not European. If you are not European, you definitely need to buy through a Spanish company, because if not, you have this problem with the with the cost deduction. Yeah. So that's the thing that everybody who's coming from outside, who not coming, but who is tax resident outside of the European Union, needs to take this into consideration. Let's suppose, for example, I wanted to point out not coming but being tax resident, because if
Mm-hmm.
I'm a Spanish guy, let's
Mm-hmm.
suppose that I would move to the United States. Even though that I'm a Spanish guy, if I am tax resident in the United States, I'm going to be considered as a non-EU tax resident. So
Yeah.
that's why I was saying it is always very important to see where is the tax residency located more than where are you coming from. So that's the thing. And yeah, basically these are the main issues to keep into consideration when buying properties. What else could I say? I could say that there is, for example, when using a tax haven country, so
Mm-hmm.
a country that does not have any agreement with Spain, then there is an extra taxation. So if you have, for example, a company in, I don't know, Bahamas or Gibraltar or these kind of countries that are in the blacklist of
Mm-hmm.
Spain, then there's an extra taxation for these companies. So if you want to invest money, do not use one of these countries that are on the blacklist of Spain, just to use a country inside of the European Union to operate and to buy properties.
Okay, I got it. Then moving on to the next question. Is there anything about the Beckham law that can be used for real estate, whether that has to do with real estate in Spain or rental income slash selling real estate from abroad? So, I mean, Beckham law is probably one of our favorite laws here in Spain. It's the holy grail of tax laws in Spain. So, yeah, any thoughts regarding this?
Well, when you have a property here in Spain, Spain will always have the taxation right because the
Mm-hmm.
property is located in Spain. All right. So in any case, you cannot avoid to pay taxes on the rental incomes that you obtain by or through this property. All right.
Mm-hmm.
So when obtaining rental incomes or when selling the property, you will always need to pay taxes. Now, here it comes to the point where there are, in some ways, you can use a strategy to avoid pay taxes. For example, according to the double tax agreement between Spain and Austria, or according, let's say so, according to every double tax agreement, if you sell the shares of a company instead of selling the property, then you will only pay taxes in the residency country. All right.
Mm-hmm.
So let's suppose there's someone living in Germany, and this person, he has a German company, and this German company has a property in Spain. All right.
Mm-hmm.
And then this German person who's living in Germany decides, instead of selling the property, to sell the shares of the German company. All right.
Mm-hmm.
In this case, the taxation will only be found in Germany, because Germany is the residency place of the private person who's selling the shares of the company, because the private person is not selling a property, he's selling the shares of a German company. Yeah.
Yeah.
So this is a way to try to avoid paying taxes. Of course, in the double tax agreements, especially in the new ones, they have like a special clause for this type of misuses of the law, and it says that if more than 50%, so if more than half of the assets of the company are related to Spanish properties, then this company, this German company, will be considered as a Spanish company, and Spain will have the right to tax the sale of this company. All right, of the
Mm-hmm.
shares of this company. This was made in order to avoid all these tricks that people just created a company instead of selling the property directly when they actually were selling the property. But what happens with some countries, for example, with Austria? Austria is a European country that is located next to Switzerland and next to Germany. Austria has a very old double tax agreement. So
Mm-hmm.
in these cases, there's a possibility to use, under some circumstances, a double tax agreement between Austria and Spain in order to sell the shares of an Austrian company, for example, and avoid paying the taxes here in Spain. So there are some ways to manage to do all these tax tricks in this sense. And now I just want to link this issue with the Lex Beckham. So with Lex Beckham, if you're here in Lex Beckham, you just pay the income tax for the earnings that you obtain here in the Spanish territory.
Mm-hmm.
So if you sell a company that is located abroad outside of Spain, then you will not pay taxes for the sale of that company that is located outside of Spain. So you can find a way to just have a company outside of Spain that buys the property in Spain together with other assets, for example, and then just sell these shares of the company that is located outside of Spain. And according to and due to the fact that you're under the Lex Beckham regime, these earnings from the sale of the shares of the company, they wouldn't be taxed here in Spain, even though there's a Spanish real estate property inside of this company. So this could be maybe a way to structure everything. Of course, in order to establish the best tax planification, it is important to really know all these details and differences between the double tax agreements with all of these countries to find the
Mm.
right country to develop all this type of tax strategies.
Does this work if, like, I assume this works, the moment you buy the first real estate property in Spain and you have that already owned via this company abroad. But does this work if I already, let's say, if I just come across the strategy now and I already have four properties in Spain, do I just transfer their ownership to this company abroad? Or does it not work if I already have a couple of properties? Do I have to like buy through the company only, or can I already put existing real estate assets that I already own to the company?
If you have already bought the properties through you as a natural person, then you will have to pay here in Spain the capital gain tax between 19 and 28%. So there's actually no chance to avoid that.
Okay.
So I recommend you, if you really want to plan everything this way, just to do it from the very beginning. Because if you have bought the properties before and then you want to bring the properties into a company, at that moment where you just bring the properties into a company, then the Spanish tax agency asks you for the capital gain tax. Yeah. So
Okay.
they just take a look at that exact point where the properties do not belong directly to yourself. At that point, you need to pay the capital gain tax. So if you are planning to do something like that, I would recommend it to plan it from the very first beginning.
Okay, got it. All right, moving on. What have been some of the best real estate deals you've seen or heard about that got someone a massive tax break or reduction?
I would tell you the typical one is when you sell your own property. This is the typical one that is completely tax exempt. Then other options that I have seen, maybe not by selling, but by buying, for example. Why? Because as I said at the beginning, you need to pay either the transfer tax or the VAT. So you
Mm-hmm.
need to pay one of this. So there's a trick. If you're a company and you buy a property from another company, all right, and you're going to use this property that you buy for an activity where you receive VAT from your clients, yeah, let's suppose that you are going to use it as a hotel, for example, yeah. In a hotel, all the clients that book a hotel night, they pay VAT to the hotel, to the company, right?
Mm-hmm.
So when the hotel or the company who's had this hotel buys the property to another company, then they can choose to pay the VAT. But due to the fact that they have the right to obtain the VAT back because they are doing an activity where they receive the VAT from their clients,
Mm-hmm.
then they can just avoid paying the VAT. All right. So that's a super good thing when buying properties and when these properties are going to be used for an economical activity, and this economical activity is not tax exempt. All right. What happens, for example, when you're buying a property and you really do not want to do a big stuff? Yeah, you just want to have the property and you just want maybe to rent it or do something like that, something chill. Yeah.
Mm-hmm.
If you rent the property together with hotel services, for example, cleaning, everyday changing of the sheets and that stuff that are typically from a hotel business,
Mm-hmm.
then this rental of the property will not be considered as a normal rental, but it will be considered as a hotel activity. Yeah, just with a few things, it is going to be considered as a hotel activity. You rent then the house with these services included, with the cleaning lady that comes every day and that stuff,
Mm-hmm.
and then you rent the house with VAT. So you ask to your client, okay, just pay 200 euros a night plus 10% VAT. So then you get the right to deduce the VAT of the purchase, which
Mm-hmm.
means that if you bought a villa for a property for 1 million euros, instead of paying the 10% VAT or transfer tax, you just avoid paying this 10% VAT. So you just avoid paying 100,000 euros. This is your tax savings. And the only thing that you need to do is just when you rent the properties, the property just rented together with these hotel services. Yeah, because
Okay.
in this case, it is going to be considered as a hotel activity with VAT, and therefore you will have the right to deduce the VAT in the purchase. Yeah,
Two
so yeah.
two questions I have. So if I'm giving hotel services, do I not need a license or anything since I'm now in the hoteling service? Like, can I just do this with Airbnb or Booking.com style property, or do I need
Exactly.
anything
You
extra?
can do it with Airbnb and Booking.com. In many regions here in Spain, they ask you for a touristic license, which is not the same as a hotel license. All right?
Okay.
It's just touristic license. This is just a standard license for houses.
Mm-hmm.
And then you need to have one of these in order to rent the property with hotel services. All
Okay.
right? Here, for example, on the Balearic Islands, there was a possibility to get one of these license, touristic license. So everybody could get one of these touristic license for their houses.
Mm-hmm.
But in the year 2018, they just cut it. Yeah, because there was so many tourists that they
Yeah.
just decided to cancel this license. So only the people who got the license before 2018 are the ones who can do this strategy. So in the rest of Spain, it works more or less the same. In many places, they require you a touristic license so that you can
Okay.
rent it through Airbnb and then offer this so-called hotel services. Yeah.
Okay, got it. Hey everyone, thanks for watching the interview. Like I said, this was just the second part of the interview. Click through here to watch the third part about the Burr strategy in Spain and also the first part about a beginner's guide to real estate investing and holding companies in Spain. If you thought this was helpful, make sure to like the post and please, if you're watching this on YouTube, click the subscribe button to stay tuned for more helpful tax content for you and your friends. If you haven't joined the community yet, I'll leave a link in the description for you. Alright, bye bye now.